Welcome to Tutor Sam Academy.
Hi everyone, my name is Sam Otunbode, popularly called Tutor Sam. Alright, you're welcome to Tutor Sam Academy. And for today's class, we'll be looking at financial money. Alright, so we are looking at the introduction to investment appraisal. And of course, we have a few performance objectives that in which I believe that at the end of today's class, each of the viewers or students are expected to comprehend the following. Number one is the definition of capital expenditure. Number two is the definition of investment appraisal. And number three is a detailed comprehension on the methods of investment appraisal. So to start with, what is capital expenditure? So you agree with me that no organization or business can survive prevailably without a purchase or acquisition of any non-current asset. So as important as non-current assets, of course, which is primitively called fixed asset, is in an organization. So it is expected that organization invest in incurring those kind of assets. So of course, the acquisition or the purchase of the non-current asset will go capital expenditure. Is that okay? So of course, simply put, capital expenditure can be defined as the spending on the acquisition of non-current assets. Of course, when we talk about non-current assets, we are talking about buildings, we are talking about lands, we are talking about plants and machineries, and etc. Are we good now? All right. So capital expenditure is actually the spending on the acquisition of non-current assets, and I'm giving the light of the example. So number two objective, we are looking at the definition of investment appraisal. Alright, so that's the subject matter. So what exactly is investment appraisal? So I'm going to make it a little more practical. Right, so before an organization embark on incurring any capital expenditure whatsoever, there is always an evaluation that is done or carried out by such organization to help them make decision whether or not to buy or to incur that capital expenditure. So that evaluation is what we call investment appraisal. So you are trying to appraise your investment, of course. So if an organization wants to invest in a particular project or purchase any capital item or non-current asset, so an evaluation is expected to be carried out, and that evaluation may help the organization to make a decision whether or not to incur the capital expenditure. So that's what we call investment appraisal. So investment appraisal is actually an evaluation carried out on capital project or investment project. Are we together? In order to help the organization make a decision whether or not to invest in the project. Alright, so for the third one here, we have the methods of investment appraisal. So what are the methods we have? Of course, basically we have two methods, and under those two we have various categories. So the first method, right, the methods of investment appraisal. Alright, the first method is what we call non-discounted cash flow method. Non-discounted cash flow method. Now, for non-discounted cash flow method, of course, non-discounted cash flow method does not consider the time value of money. Alright, so it's a method of investment appraisal that does not consider the time value. Are we together? With money. Alright, so under non-discounted cash flow method is where we have accounting rate of return. Called accounting rate of return. And of course, still under non-discounted cash flow method, we have what we call payback. Which is a PV. Are we good? Alright, so those are the two categories we have under the non-discounted cash flow method. Of course, the second we have discounted cash flow method. discounted cash flow method. Now, of course, the discounted cash flow method is direct opposite from the non-discounted. I said non-discounted cash flow method does not consider the time value of money. However, discounted cash flow method, on the other hand, considers the time value of what? Of money. And under it, we have the light of net present value. Net present value called NPV. And of course, we have the internal rate of return. Called IRR. And of course, finally, we have all the profitability index. Okay, so I believe with all of this, we can now categorize or classify each of these methods of investment appraisal into both non-discounted cash flow and discounted cash flow. Of course, in our subsequent class, we'll be looking into each of these methods. Start with the accounting rate of return, then we'll move to the payback period, and of course, we do the NPV, IRR, and profitability index. So, thank you so much for viewing. Thank you so much for joining. I remain Sam Akiwadi, Tutor Sam. Subscribe to our YouTube channel in case you are subscribing and watching us for the first time. Do well to subscribe. And God bless you. Thank you.